GPT Metro Office Fund is a real estate investment trust that listed on the ASX in October last year. The fund owns 6 quality A-grade metropolitan and business park office assets in Sydney, Melbourne and Brisbane, which have been independently valued at about $376 million. I'm Lelda Smits, and joining me at ASX Investor Series Sydney is Fund Manager Chris Blackmore. Chris, welcome.
Thanks, Lelda. It's a pleasure to be here.
Now, could you start by giving us an update on GPT Metro Office Fund? How long has it been operating for and what's its size?
Yeah, so GMF, or the GPT Metro Office Fund, is an Australian real estate investment trust. We specialise in owning metropolitan and business park office properties throughout Australia. We listed in October last year, so we've been trading for almost 8 months now. And we own 6 properties in Melbourne, Brisbane and Sydney, valued at around $376 million.
Fantastic. And Chris, who's responsible for managing the fund?
So the responsibility primarily sits on my shoulders as fund manager, but of course, being part of the GPT group, the GMF Office Fund gets the benefit of the GPT platform of services to ensure its success. So these services will be covering finance, tax, legal, asset management, leasing, development, capital transactions, etc., etc. GPT itself is also listed. It's been listed since 1971. It's one of the oldest and more established property groups in Australia, with assets under management of just over $18 billion.
Right. And Chris, what do you believe makes GPT Metro Office Fund an attractive investment?
Yeah, so look, it's really all about the quality real estate that we own. It's the attractive returns that we offer investors, and it's being able to leverage that GPT platform for success in the future. So we own high quality buildings leased to reputable tenants, long leases, fixed increases in rent over time. So that's providing us a good solid base for our income going forwards. We take a conservative approach to capital management, and we're forecasting an attractive distribution yield for the period ending 30 June, with an increase in that distribution for the following period ending 31 December this year as well.
Okay, and could you explain a little more about the rationale behind investing in metropolitan markets?
Sure. So research shows that the volatility of returns from metropolitan markets is lower. So this is primarily coming from the fact that the majority of that return comes from income. So there's a less reliance on capital growth going forwards. We see that pricing is attractive. So cap rates have been compressing over the past couple of years. We've seen capital values improving, and that pricing differential between metro and CBD markets is still sitting around that long-term average. So through the business cycle, we'd expect that to compress a little bit further going forwards. So there may be further capital value improvements to come going forwards as well. We also think it's an excellent time to invest in the market. So since 2014, we've seen demand increasing. We've seen supply at the national level coming off since about 2012. So at that national level, we've got rising demand, falling supply. We've seen vacancy rates moderate and settle, and we've seen rental growth really come through in the last couple of quarters. So at the end of 2014, the first quarter of 2015 as well.
Now, final question, Chris. How important are the relationships with your tenants in your metro properties?
So look, we're a service provider. So the relationship we have with our customers is the key to our success. We're very fortunate to have the likes of Samsung, Lion, and those people like Optus as our key tenants. But we work hard at maintaining those relationships. We work hard at improving them as well.
Great. Well, Chris Blackmore, thank you for the update from GPT Metro Office Fund.
Thanks, Lella. It's a pleasure to be here.